Let me start off with XRP, and let's have a look at what's happened today or yesterday even. And I'll start with this chart here. Yeah, so you can see this ascending channel, and you see the first drop into it. Generally, you don't count that, so the touches are 1, 2, 3, 3, 4, 5 here. So 3 to the top and two to the bottom so far. Yeah. Now potentially there might be another leg. There might be another leg up in this pump. Yeah. So if it is, it could be looking at a 1, 2, 3, 4, and possibly a 5 up to anywhere as close as 45, 45 cent or so, and essentially just to the top of the channel. Here's the 06, or sorry, the 05 on the macro fib. It could even push up as far as 45.6. I don't think it will, but potentially, yeah. So there might be another leg up. We may also be done here. It may have topped out. You'll see this level here is this level at about, let's make this a little stronger, this level at about 39, 31, probably even a little higher, yeah. 39.70 is price action has got below that. If we start getting candles 1 hour, preferably a 4-hour candle below that, is then I think the correction is in and is going to continue down. Yeah. So at the moment it's got a wick down, but we got to see if it's for continuation down or it's just a 3, a 4, and then one more push up. Yeah. There's the drill again. It's continually banging away there. But anyway, let's keep going. So that's one possibility. We got to see how that plays out, and then the return level is very simply is back to the bottom of the channel here at around 35.9. Yeah. Now if I put the fib on it from where it is, from here, if I go all the way to here, is the 786 down at 33.30. Now that might be a bit of a stretch. If you look at the 618, it's at 35.09. However, if we simplify it and we go, look, it's shorter. If this impulse isn't valid as an impulse, because there's a lot of chop in it, a lot of messiness in it. So I'm not sure whether it's a valid impulse. But this last leg up here, this has its own three legs up. Yeah. So even a 786 correction on that would bring it down to 35.65. Yeah. And again, a little wick through to the channel there would make sense. Yeah. So essentially is the two stories I'm looking at are obviously up and down. If it pumps up again to say 45 or 43 to 45, is what we could have. Again, I'm going to put the fib back on it again. I'll do it from here because that would make more sense as an impulse. Is we could have a shallow correction, and a shallow correction generally lands between the 382 and the 50 for some reason. And I'm going to put it there at about 38. We could have a correction to 38, okay, and then have a breakout of this channel. Have a breakout of this channel for continuation on up. Yeah. So, and that would be up to about 59, 60 or so. And that would make sense because that's the top of the bear channel. That would make sense. So potentially we're looking at that. is, excuse me, so, and that's if we get a shallow correction and head on up, is if it comes back down and does a deeper correction back to the bottom of the channel, I think it's leaving the space open for the breakdown of the channel. Excuse me. And we're looking at the target there of 26 cent and 40, yeah, or thereabouts. And that would bring it down to a 1414 on the way down, yeah. So now is we got to watch to see. We got to watch to see what price action is going to do here. Is this a 3, 4 heading up for 5? Potentially a shallow correction and continuation for the breakup. And I'm going to show you on my other charts the case for that, yeah. Or we're going to have the correction back down to the bottom of this channel so that we get 3 touches to the top and then 3 touches to the bottom. It might want to even go up and do another one and just drag itself out. There's an argument for that as well. I can show you that as well, yeah. So we'll see the play of it, yeah. If we start to see it do a shallow retrace and start breaking above the previous high here, and I think we're in for that bigger pump, yeah, obviously. So now with my arcs is I've reset my smaller arcs. Is this arc here, I was having it to here, and then when this broke out is again it invalidated this arc and I had to reset it. So there's 1, 2, 3, and here's a new arc being set on the smaller time frame. Okay, so I'm going to move these out to make it clearer. Okay, and I'm going to take this one out of the way for a sec. Now this one here, I was full sure that this was Mountain Peak Skyline, Mountain Peak third drop. And it may well be, and we have our breakout. So we have our breakout, we have our back test, and continuation on up. That makes absolute sense. Or this becomes Mountain Peak. And my argument for that, my case for that is that when I put the fibs on from here to there, because that's the levels, that's the range, I put the fibs on, as you can see it hit a 702 here, you can see it hit a 786 here. So again, is Mountain Peak likes to do a 786 as well. And I have seen it in the longer time frames, it can get really stretched out. So that's what I'm not sure about. This is, I'm just going to map it out, because if this is Mountain Peak here, then we're on the breakout. If this is Mountain Peak, then we're coming in for that deeper correction back to the bottom of the channel, and that leaves the space open for a continuation and a breakdown. What would happen is that you get third drop, final peak, final bounce, final retrace, and again it can come down, or it leaves the space open to go up. So that's the dilemma. I mean, is which is it? So now you can see price action has gone to 42.50 here. If that starts heading up to the top of the channel, it's getting very close to the top of this arc here at 46.35. Yeah, it's getting very close to it. So that would have me starting to think that, okay, look, this is starting to look like it wants to continue up. Is we get a shallow back test and on it goes, and that means then that this was the arc and this was the breakout. So that's you can see what I'm saying there, yeah. Or is if we start breaking below the 38 and start heading for 35 or so, is that's telling me that, okay, this is Mountain Peak and we've got this space to move in. Is third drop, final peak, final bounce, final retrace, and we've got more space to play out in, yeah. Now it does feel like we're in breakout zone, just with other things that are going on. So, but again, that's yet to be seen, yeah. So now another argument for the break up, and these are strong ones, is here's the SMAs, yeah. On the 4 hour is you've got the 50 SMA and the 200 SMA. And these don't cross over very often, but you can see here that the 50 is very close to crossing over to 200 here. And again, that's a strong argument for the pump. Okay, now adding into that is that breakout. Also, look at the bear channel here and the center line. The center line was tested 1, 2, 3. It broke here. It broke here. Broke, did its back test, and then it's pumped away. So that's a very strong argument for a continuation up. To add to that is the EMAs. I'll show you on this chart. Is the daily EMAs have crossed over. The 20 has crossed over to 55, and again, that you can see why that pumped more, yeah. Where I thought it was going to top out here, and that would have fit in with a mountain peak, but it kept going, yeah. I was checking to see whether it would top here, and again it would create a rejection here, yeah. It hasn't at the moment. It still might, but for now this crossed over, and it's the second day crossing over. So now you see the pump is generally when you get a crossover like this, is you get a pump and then you get the back test, and it generally comes back and back tests the 55. So there could be a back test again to 35.7, 36, 30, 35.7, even a wick through to 35 or so, which will be the bottom of the channel. It'll be the bottom. It'll be back to the bottom of this channel, and again it could be that back test and then a continuation on up. So that's what I'm watching out for as well, yeah. So now when I go to the EMAs, I'm zooming in just a little here for a moment. Yeah, on the 5 minute, the 5 minutes crossed over. So look, we're having that spill. Look how it back tests to the 55, and it'll push on down the top left. Sorry, top left. Yeah. When I go to the top right, at the same time is the 15 minutes after crossing over here, top right, and again is a back test, and it's going to push on down. Yeah. So that's the 15 minute. Now that'll take it. The 15 minute could easily take it down to the shallow back test at 38. If anything, you're going to get a minimum of a 6% move on that. If you put a 6% move on that, it takes it down to 38. So this could be the 3-4 for the 5. But I think once it breaks 39, I think it breaks about 39.7 or so. By the time it gets down there, it's down. It's one leg down. It's a second leg down. It's hard to imagine that it'll pop back up, but it might. It might. So this is the 15 minute. Okay, so now what's going to take it deeper is if we look at over here on the bottom left is the hour. So you have the hour EMAs, and they're reasonably close as well, yeah. So if the 20 comes down and crosses over to 55 on the hour, is then we're going to have a bigger drop down as well. So that's at 38.87. So it's not price action getting below 38.87, it's the 20 crossing over it. That would indicate that there's a far bigger rejection going on. So I'll be watching for that, and that won't be as easy to do. That won't be as easy to do. So what you might see is price action come all the way down to 36 or 35, somewhere in that zone, is the 20 EMA get very close to crossing over to 55, but get rejected, turn on up and pump, or else it could cross over and then it's a rejection of the lift and we're coming down for a bigger dump. Is quite possible that could be the what's it called? The crossroads, the Rubicon, is when it really decides what direction it's going to go after the move is just done. That is just done over the last day or two, yeah. When I go to the MAs, I'm going to start off on the daily. Now this is an argument for a pretty solid correction coming in here, and I'm gonna look at this one. I'll actually do this, and then I'll put this here so you can see it. Yeah, even there. Okay, so this is all the sideways of the previous sideways on the daily over the last couple of months. Yeah, so you can see that there was a bullish and bearish divergence triggers. Yeah, so you can see every time there's a you've got one point to another. Every time you see that it moves. So there's a bullish and it triggers. There's a bullish, it triggers. There's a bearish, it triggers. So they've all triggered. There's a bullish and it's triggered. Yeah. Now the point I'm trying to make here. Which one was I on? Is it this one? No, it wasn't this one. Sometimes I do this. Now I'm trying to figure out which chart. Was it this one? There we go. Yes, so you can see it here. So now on the daily see bottom left, see this bullish trigger here. There it is here. From there, look, it triggered. See the bearish one here? From here it triggered. Here's this one here. Okay, now it did it. This one here, it came down one more time and then it triggered. Okay, so my point is that look, we have a bearish divergence here. So we've got a bearish divergence from this level and that level. And again, to be honest, I thought this was going to be the level, and then we're heading back down. It went up another level. But look at the day. The daily has a bearish divergence. It went up one more level, and again, it's triggered. So it looks like there's a deeper correction gonna happen. Yeah. So on this one, it was a 35% move. On this one down, it ended up, even if we just do it to there, that was a 20% move. This one here was a 35% move. Now we have a bearish divergence again. So this is an argument for the down, yeah? Is on this one here. We've had 35s, we've had a 20, let's say a 25% move. So a 25% move here would be 31.74. Okay, let's say a 20% move. A 20% move would be 33.6. So when you look at it from this point of view, is 33.6 seems reasonable. Now where would that be on the fibs? If that was on the fibs, we would be starting from the bottom here and using this as an impulse and looking for the correction here. The 786 correction will be 33.40. So now that's an argument for a correction down to 33.40 based on the divergences on the daily and measuring them off the swings that are in this sideways action, all the way through this sideways action. That's a reasonable argument that it could come down. Now if we look at that on this chart, okay, on this chart, and we put it here, is the 786 will bring it down and would be breaking below this channel line again, yeah? Okay, and again, it would also be setting this channel line for 1, 2, 3, 4, 5, 6. And if it breaks this, we get a back test, and then we find ourselves going down. So now there's an argument for this is a breakdown rather than a break up. And it would invalidate the SMAs. This 4 hour would do a reversal. It would turn around and we get a rejection here. Equally, the EMAs on the daily is we'd get a turn of this, we get a rejection, and down it goes, yeah? So you can see how it's, there's a solid argument for both. Like they're clearly showing both. And here's the ascending channel. just to keep adding to it, is here's now a larger descending channel. Okay, this one is a big argument for a breakdown. Look, there's been a breakout of this channel. If it comes back into this channel, it comes down to a 33, does a back test, and we could have a continuation on down, and we're heading down for a 26, 27, possibly even a 24. And that this is the pump up for the push down. So this could be just a fake out. So yeah, so you can see that both, but to me both are possible. Is picking one over the other is I have as many indicators to say one as the other. Yeah. So now where are we here? The last thing I'm going to do is just have a look at the MAs, okay? And if I go just to the monthly, I'm zooming out to go. Can something greater give me a bit more of an idea? Yeah. To me, the monthly at the moment is the 5 is coming down. You can see it got a strong push through. So again, a push through, it could come up and hit the 10 there, and there's 54. So there's an argument for, look, if it's breaking the 5 and the VWAP is turned up on the monthly, it's looking good for a pump. Equally, it could have topped out and we're heading down. And I'll go to the weekly. Okay. So on the weekly, again, you can look at the 5 and 10 here, and you go, look, this is looking fantastic for a pump. Okay, but now look, the weekly is got rejected at the 20 EMA here, and again is excuse me, looks lovely. Look, there's a W on the weekly, fantastic for a pump. We're heading up to the 55, even the 50, so that's solid. But at the same time, for the down, is it hit the 20? Is we could be looking at on a larger scale on the arcs, is looking at a mid-range high, and this is the final lift before the dump. Okay, so again, it's turning me this way, it's turning me that way. If I look at the charts here, the lift is definitely on the MACD. The lift is definitely for the up. Is the RSI is definitely for the up. Okay, now this is a percentile impulse here, so I'm still figuring this one out. I understand that when it reaches bottom right, by the way, I understand that when it reaches here and it reaches here, the bottoms and tops. This one looks like no, I won't talk about it. I've got to clear my head, but I'm not used to talking about it, so I won't talk about it. Is one thing I'll say here is about the boot. You know, the boot. Here's the heel. Here's the ankle. Potentially is this making an argument for the down, yeah, but that's not necessarily TA, so that's just the boot. So now if I just do a quick flick through the dailies, there's the 20 EMA getting a push through here on the 6th day, and we're going to have a big turn of the dailies tomorrow, yeah. So tomorrow is the 22nd, and the 6th day turns tomorrow. So now the 5 is up, the 10 is up, the 20 is up. Is this all looks good for a pump, and it's going to turn tomorrow. So the 6th day definitely looks, and RSI is up, MACD is up, looks great for a pump. Same with the 5 day, and that is going to turn 2 days time. Same with the 3 day, and that is going to turn tomorrow. Same with the 2 day, and that is going to turn tomorrow as well. Okay. Sorry, that was the 3 day. This is the 2 day. 2 day is going to turn tomorrow as well, and again, look, that looks pretty good for a pump there. But on the 2 day, I can see this also can do a reversal here, and the way these MAs are, they're easily moved when they're in a position like this. It does look like a pump, but the one isn't moving, or the 5, the orange one there, isn't moving away too fast. And the bottom right here, this one here, the white one, this is the RSI. The RSI is topped out on the 2-day. I can't go further, but it's topped out at the moment. Yeah. Bottom left, you can see that there's a divergence, a bullish divergence on the 2-day. So again, that's promoting the pump. So you can see that at the moment it is the pump looks to be swinging it a little bit. Yeah. However, when we get to the daily, if you look at on the bottom, second from the right, is the RSI is sharply down at the moment. That can turn up tomorrow, but at the moment you can see it's topped out. When you look back and you go, when was the last time the daily RSI topped out? You've got to go back to February. The 10th of February was the last time the RSI topped out. So now it's topping out again. It can't, obviously you can go higher, yeah. But at the moment it's topping out and it's getting a rejection. Now, it might only be a daily rejection. We come down, we get a shallow correction, and it continues on up. For sure, that could be the case. But when you go over to the far left, again, as I said, there is a bearish divergence. There's a bearish divergence, so that's indicating that there's a reasonably strong push back down, a correction. Yeah. Now the argument for the down here is you see on price action itself. See the orange one, the 5 here. The 5 here is moving away, and it's moved away quite a bit away from the rest of the MAs here, which means that these are very malleable. So when the 5 moves away too much, it gets weak. It loses its strength because the 10 and the 20s aren't backing it. So it could be peaking out here, and this is the pump before the dump, and it just turns and it drops, and it pulls everything in the opposite direction. If it's going to do that correction down to 33, is 33.3 is somewhere around here, is that would definitely tomorrow, if this correction keeps going down, it could turn to 5. So if you see price action get below 38.75, you'd probably need it down around 37.50 or so. If by the turn of the day today price action is down, let's say to the bottom of this wick, bottom of this candle. If price action is down at 37 at the end of the day, that for sure could turn to 5 on the daily. If you see the 5 on the daily turning down, then you know then it's gonna pull it down for sure at least to 33 or so, 33.50. So that's what I'll be looking for with how price action moves today. Yeah. So now, if I just have a look at the 12-hour, the 4-hour, and then we'll just zoom in to see what's going on. Yeah. You can see on the 12-hour, bottom left there's a bullish divergence. So bullish divergence from here, it went up another level. Again, it did it here as well. If you look at this one, it did a bearish divergence. My apologies. It did a bearish divergence here, and it did a 786 correction on this one. So now it's doing a bearish divergence here. So now we could be again looking at a 786 correction or so. Yeah, which again would take it down on this level. Would take it down to 34.10 or so. Okay, so again, there you can see the way everything can look like a pump. It could be a fake out, and if we get a deep correction here, it can turn everything that looked like a pump. It can start to turn it into a pull down. So that's what we got to be we just got to be careful of that. Yeah. I'm gonna hide these again. I'm nearly done. Let's give me the eye here. Okay. So now, when we look at the 4-hour, and on the 4-hour, just waiting for the charts to come in. On the 4-hour, the 5 MA has turned down. Yeah. So again, that's a really good sign. Is now we got to be careful. Remember, it could come down to the 38 or so and do a lift up. So what we want to see is the 5 MA cross over to 10. If you see the 5 MA cross over to 10, that's the clear sign of reversal on the 4 hour, and that again, that will be giving an indication that this is coming down for a deeper correction. And you can see bottom left, you can see the bearish divergence there. Yeah. Excuse me. So that's what we're looking at there. Yeah. Now what time is it? The 3 hour. Let's have a quick look at the 3 hour. The 3 hour turn there 40 minutes ago. Okay, so there's the 5, there's the VWAP. See, there's a battle going on to 10 here. Okay. And you see there's bearish divergence there. The 2 hour is going to turn again in 20 minutes. What we'll be looking for here is the 10. See the blue one, the 10 to turn down. So the 5 and the VWAP here, you get the 10 turned down, adds more pressure for the push. Yeah. And I think when we see the next level break, you see it wick down to the 20 here. The next level down would probably take us down to 37.73. And then the 1 hour. The 1 hour, okay, and again, look, you can see here's the 10 coming down. What we need to see in 20 minutes or so would be great to see the pink one here, the 20 MA, that turned down as well. And look, it's broken the 20 EMA, the white one. It's back testing it, and again, it looks like it's going to come for a spill. I bet when we go to the 5 minute, we'll probably see it topping out on oh, I know what's missing here. I did this wrong. Where is the? Here it is. There we go. The stock here, the stock RSI. You can see it's topped out here in the 5 minutes, so that's set to come down here. Yeah. So there's a resetting of the 5, bottom left here, or bottom right even. A resetting of the 15 here, bottom right. So again, you can see that this is the back test of the 5 crossing over. Here's the back test. It's going to top out, and then we'll have another push down. Yeah. So that's what's going to happen here. So that's it. So it looks like it's definitely looks like it's in for heading down for 37.50 or so. After that, we need to see if it's going to go down, continue down further for a deeper correction, and look for clear signs of reversal. So the 4 hours, the 5 crossing over the 10 MA. On the 1 hour we would need to see the 5, the orange one, cross over this green one, which is the 50. It's not just price action, it's the 5 crossing through the 50, and that's a very strong sign for reversal. That to me now would be signaling it's definitely going to do a 786, which again would be taking it down to 34 or so. And that opens up the door for a switcheroo and a down, for a breakdown, a dump. Doesn't invalidate the pump, but it leaves the door back open for both. So that's what we're looking at. Yeah. So that's it for me. So I would suggest look for price action breaking below 38, 37.50, and we're going to go, I think, for the 786 back down to 33.30 or so. Yeah. And then just be mindful, it may be much shallower, so you could be looking at a range of anything from 36.6 to 35. It may be a shallower hit in these lines here. Yeah. I know I'm giving lots of targets, but that's the way the cookie crumbles at the moment. Is we are in a position where it's showing us a pump, but it's still leaving the door open for it being a fake out and a dump. So all these ranges are, we just got to watch and see what it does, and then respond to when it moves to where it moves to. Yeah. So So that's it. Enjoy the rest of your day, and safe trading, and I'll talk to you tomorrow.
Let's see. Okay. Good morning, guys. Let's see where we are with Ethereum and Bitcoin. The conversation will be a little bit more simple than with XRP because they didn't do a 16% pump as XRP did yesterday.
I forgot to mention that. Bitcoin and they both look like they're gonna drop like lead balloons.
Yeah, but they did their corrections. So I'm gonna start with Ethereum because it's a bit neater in levels. So what we have on the daily with Ethereum is for the past 4 days, Ethereum has been holding the 1290 level. So and the stochastic on the daily is crossed up. So technically, when a level holds for this long, it's going to hold for reversal. And at the moment, we don't have any support for reversal, even on the 1 hour. You know, I'm looking at the daily for levels, but then I'm watching for reversals on the 1 hour. What I'm looking at on the 1 hour structure is this descending channel Ethereum has been in. Now it hasn't gone anywhere since the previous 1318 level. So I will do some maintenance work on it, and I will expand it like so. So now I can still keep all the swings, 1, 2, 3, 4, and we should have another swing, 5. This would reflect better what's happening. So now Ethereum is pushing to get some support on the 20. On the 20 EMA on the 1 hour, which is the first line of support that I watch for in reversals. Do I believe it's gonna get there? I don't think it's gonna reverse. So usually when Ethereum holds this low, it's going to drop one more step. But before dropping one more step, what Ethereum likes to do is spike the high. So it does 2 peaks, and 2 peaks at about the same level, and then it likes to do a third one. I'm going to pick not this one because this is, but for instance, this one and this one spiked the high, dropped lower. Where else was it? I think it was here as well. This one was 2 peaks, and then it did a whole swing and then went lower. So Ethereum likes this pattern a lot, which is an ascending arc pattern with a drop down to the next level. Now it might spike above the previous 2 peaks at around 1400 and then come lower. That might happen, and that would consolidate this bottom here. Do we have 3 steps down? I believe we have 3 steps down. The question is it going to come down here for a double bottom at around 1217? And that would be in line with. Now I'm just eyeballing this. That would be in line with the midline of this channel, which is generally where channels like to bounce off and then break. So what I'm watching for today for Ethereum, and similarly I'll say pretty much the same thing for Bitcoin, is support on the 55 on the 1 hour. So it looks like it's going to break the 20 EMA. It looks like it's going to come up and test the 55. If it tests the 55 and succeeds, and then it breaks the previous highs here, then we're looking at Ethereum maybe coming up to meet the target of this channel up around the 1480, because it would be a little bit lower now in terms of level. So two numbers to keep in mind: the 1400 level and then the 1480. What's going to happen after that is I believe that the 1 hour might go into the overbought, and we might come down for a correction. A correction from here, maybe down to here and continuing upwards, or a correction lower. let me just check. Yes, so the 4-hour stochastic is back into the box, and that's not generally a good news for any sort of lift happening in this space, unless, and again, unless the market is held and the 4-hour RSI, stochastic RSI, turns upwards. So if we have a stochastic RSI turning upwards, and if we have a support on the 55 on the 1-hour EMA, then we might be looking at continuing upwards following the daily stochastic RSI. It is hard to read the charts at the moment because we have done a 702 correction. We've been holding this 702 correction, but we haven't really gained any support. So that's why I am in between the up move and the down move. If we had all this while, like for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 hours we've been holding the 702 on the buy bid for correction, and we haven't managed to gain the 1-hour 20 EMA. So again, that makes me be personally more inclined to think that this is consolidation for another leg down. That's what I would be trading. But I would be keeping a close eye on it, especially in the coming hours, checking to see what's happening with the 55 EMA on the 1-hour. The 15 is hard to read at the moment because it's been basically sideways, so it's slightly descending sideways, consolidating here. If I am to be a little bit more technical and place a triangle, a small consolidation triangle here on the 4-hour, we have one swing into the triangle, one swing up, then we would need, let me check, let me bring this in. So we would be moving in this very tight space here between the 20 EMA 1370 on the 4-hour and the support line here, which would be 1320, which makes perfect sense. Now, there is a whole bunch of news coming out towards the end of the New York session, 7 p.m. UK time, so 9 p.m. my time. So 7 p.m. UK time, we're gonna have a lot of FOMC news coming from the States, which generally bring a lot of volatility into the market. This price compression here would make perfect sense to hold the space, to hold price action in this tight space, and then when the news comes out, break upwards or downwards. Again, I repeat, Ethereum has done its correction. So with the correction of the swing done, we are free to go either way. Yesterday, I was telling you we need a correction. Today we can see the correction has been done. It's been consolidated. It's done a higher low. So technically, what we need for the up to be confirmed would be support on the 20, on the 1-hour, held for 2 candles, and then the 55 ideally for a longer term move for the breakout of this channel. So that would be the requirements for an up move for Ethereum as we are at the moment, because we have finished our correction. Bitcoin is in a similar situation, but the correction that Bitcoin made is a little bit more shallow. Bitcoin has only done a golden pocket correction. Now, I'll qualify it. The only time I've seen Bitcoin recover from the golden pocket. So the golden pocket is a great level for consolidation for another push down. The only time I've seen Bitcoin recover from the golden pocket was when it did a V-shaped recovery lately, and it got above the 20 EMA on the 1-hour in less than 2 hours. Now, similarly to Ethereum, but a longer-term consolidation has been happening around the golden pocket for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, almost, let's say 24 hours, because I'm too lazy to count all of these candles. So we've been sideways in Bitcoin between the 0.32 and the golden pocket, a glorious range of 2% for about a day or so. The stochastic on the 1 hour looks like it wants to turn up. We haven't had in about, when did we lose the support of the 20? We lost it here, 20th of September, and we are, okay, about a day and a half. Terrible at basic maths. So about a day and a half, 36 hours. Let's round it up to 40. We've lost the support of the 20 on the 20 EMA, and we haven't yet managed to regain it. Now, again, based on observation, Bitcoin likes to test the 55 on the 1 hour at least twice on its way down. So it's tested it here, it's tested it here twice, but this would be pretty much the same stage. If we look at the previous swing, tested it here, tested it here, tested it here, and then here and here and here was a long consolidation. So here was level 1, level 2, level 3. At the moment, I believe we only have 2 levels here. Again, if the correction is done to the golden pocket and even the 0.5, because in more bullish I'll be mindful of saying that when we have some support on the longer time frames that creates some bullish momentum, and here with Bitcoin we do have this very big long-term support and resistance line across the 3 months that it's been holding. So for 1, 2, 3 days this line has been holding, and it's normal for this line to create a little bit of an uplift markup momentum. So when the big time frames, just like with Ethereum, the daily time frame is giving us some support. When the daily time frame gives us some support, if the shorter time frame has done its correction, then I don't see any reason why we can't have a push up and a back test to some longer term EMAs, like the 4 hour 20 EMA or the 55-20 EMA, which would be again a back test of this channel that it's dropped out of. The 4 hour stochastic is on the way down. We don't have any particular divergences at the moment on the 4 hour RSIs. What we do have on the daily is the MACD crossing down. Now the MACD crossing down on the daily doesn't generally happen very easily, and when it does happen, it has a tendency of pushing down a little bit further and breaking through support levels. So again, as a trader, I am shorting this move down to the technical target of 17K. So that's where I believe this will go. My invalidation for the downwards move would be, because I am doing a 4 hour trade, would be gaining support on the 4 hour 20 EMA. My first red flag would be gaining support on the 55 1 hour EMA. So when the 55 at about 19,100, and then the 4 hour, let me just see how far off, because generally they're quite similar. They're not the same, but they're quite similar. So the first red flag will be about 19,100, which would be again regaining the 19K level, and then I would probably look to close part of my short so that I would de-risk some of my position, if not all of it, depending on how the oscillators, the stochastics, are at that moment, around the 19,300. Could it go back up and back test it and come down? Yes, it could. Absolutely. It will be making an M formation here on the way down. And again, the most conservative target would be around the 17K, if not even lower. So this would be this technical target at the breakout here, 16,800. That's it. That's it for Ethereum and Bitcoin. Long story short, we have support on the daily levels. The shorter time frames, the recent swings have had their correction. The question is, could we see a reversal? And for that reversal to happen, we need to gain support. We need to gain structure around, for Ethereum, let me say the number. For Ethereum, it's around 1350. Yes, 1350. So Ethereum holds 1350 and then breaks the previous peak. We might be looking at a reversal. We have to see how the oscillators play out, and we also have to check the trader's reality for the vector indicators to see if there are any reversals happening when we reach that, because again, that might just be a back test, as they like to do it, and then push down. For Bitcoin, the level to regain support on would be again 19,300. If it gains support around the 19,300, let me just move this a little bit lower. No, I'll leave it at 19,500 because it's very stable where it is right now. At 19,300, that would be the 20 on the 4 hour, the 20 EMA on the 4 hour. So again, for the short position holders, I would be looking at either de-risking at that point or closing position. Because again, there's gonna be some very volatile times now, both today and tomorrow. I checked tomorrow. Tomorrow we have about seven. I'll post a Forex calendar. There are about 7 red flag pieces of news. So today and tomorrow will be quite volatile, and that's why you want to leave yourself as open as possible or as flexible as possible to follow the market wherever it wants to go. So even if it does a fake pump, it's good to follow that fake pump and take the profit. That fake pump will also need support. So if you can't catch that pump when it how can I say, it sets its foot on the 55 1 hour EMA, then you can just let it ride up and then catch it on the correction downwards. So you can also do that. But again, you don't wanna be locked into a trade and have a bigger position. You can also DCA. You can build up your shorts, which is what I've been doing these days on all these little lifts in Bitcoin. So you could also do that. But again, we've been at this level for a couple of days. Support is being built up, and we need to see what's happening today in terms of holding that support. But at the moment, there's no support for reversal. I'm just looking at it because that would be the next natural move after holding the support and resistance line. That's it from me. Have a good day trading. Remember to keep an eye out in the charts or to put a stop loss in around the end of the New York session, because we might have a lot of volatility kick in. So it's good to manage your position very tightly these days. I'll see you guys tomorrow. Have a good day.